Good afternoon. Coming to you from our Park City office where leaves are falling as well as the temperature. But it doesn't matter what the climate is outside. The New York Stock Exchange climate is the same everywhere. And trying to make sense out of the market meanderings, up one day, down the next, is why I'm coming to you today, because it is nonsensical. People are trying to handicap the election. There's a prevailing mood, I think, among strategists that Hillary would be good for stocks simply because she removes the unknowns. What you see is what you get, even though some of the policies that she advocates would not be good for the stock market. Higher taxes, higher estate taxes, the loss of capital gains tax, basically doubling capital gains taxes. These can't be good for the market. And when you look at Trump's policies, his anti-trade view, his isolationist view, if you will, has never been good for stocks. So, you know, there's good and bad on both sides of the ledger, and trying to handicap it is fruitless. We think strength is coming primarily from the dollar strength. The dollar has reversed a decline and is moving up on a sharp basis, and it's because the rest of the world is really in bad shape. China's problems are evident, and the Chinese currency is barking around low. So money is not only flowing in from Europe, where the euro issues are big. There's an election coming in Italy. There's financial troubles in Portugal. We know about Greece. We know about Brexit. So that whole structure over there in the euro seems up for grabs. And so people are running to the U.S. from Europe as well as the Far East, and hence we get a stronger dollar. Some of that money is finding its way into U.S. stocks, I'm sure. But to try to handicap the election is fruitless. We do know that the down ballot election, the election is important, but for us, we are not apt to make any definitive leanings one way or the other based on candidate policy until we see the full election. Until we know who controls the House, who controls the Senate, then we can determine probability of one policy coming into play or not coming into play. And that's the key approach to this thing. So we think that you hedge your bets a little bit, which we have. You hold adequate cash, which we have, to be able to take advantage of opportunities. But you don't lean too far one way or the other, because you simply can't handicap this election. There is one sidelight that's really interesting, and the media is getting trashed in this process. WikiLeaks has caught them red-handed, getting very involved with one specific candidate, and so we're obviously getting slanted news. We're obviously getting bias and proof of bias, because now these media firms that are studying the media and studying bias can now quantify how much time they're devoting to one subject versus the other. And I saw a couple of news items today. It is quite one-sided. The effect is Americans will not trust what they hear or see on television or what they read in the local newspaper. And that's going to have a lasting effect beyond the election. Exactly what that means, I'm not sure, but it is something that is emerging, that is an unsuspecting thing. So it's interesting, it's frustrating. One day you feel like the world's coming to an end because of a poll. The next day you say, well, this is pretty good. It's actually even keel. There's no way to handicap this thing until we actually see the vote. In the meantime, hang tough and rest assured that we are watching, and we have our alternative strategies well mapped up. But we're not going to move probably until we see the actual ballots. Take care.